Hello again. Welcome to another episode of the Uranium Market Minute. Today is Tuesday, April 12th, and this is episode number 104. My name is Justin Huhn. I am your host. I'm the founder and publisher of the Uranium Insider Pro Newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. As always, nothing in these videos are intended to be investing advice. I'm not your financial advisor. This is not financial advice. Please always do your own due diligence when it comes to investing. Always take responsibility for your own choices. All right, thank you again for being here. A little bit of housekeeping right up front. Next Monday, that'll be Monday, the 18th of April, we're having our next members only webinar. These webinars are 2+ hours long, usually right around the 2-hour mark. We go deep into the sector and we have a very exciting guest who is a representative of a company that we have recently positioned in that we are very, very excited about. So if you are a member, we look forward to seeing you there. If you are not a member, we do have a quarterly option that is, this is new. We just implemented this a couple months ago. Previously, you would have to buy an annual membership to get access to our content. You can access that with a quarterly membership, which would give you access to obviously the next 3 monthly webinars. So if you're interested in trying out our service for a lower cost, that option is available. I will put a link in the description below for you to check out that quarterly option. And we hope to see you all there for that members webinar next Monday, the 18th. I'm going to get into a little bit of detail about a development for SPUT, for the Sprott Physical Uranium Trust in the mailbag section. But before we do that, let's go ahead and run through the daily scoreboard and the charts. The spot price of uranium ticking up again, $63.75 a pound mid-market. Interestingly enough, the bulk of the volume in the spot market typically is what's referred to as trader churn. So that's traders selling pounds back and forth to each other, arbitraging delivery locations, arbitraging differences in interest rates, jurisdictions, etc. And this is obviously what happens most of the time with most of the volume in the spot market. However, currently, Sprott's purchasing this year to date is roughly about 50% of the total trading volume in the spot market this year. So this is a very, very big change in the spot market. And that is one big reason why we're seeing such consistent moves in such a tight spot market. So the spot market continues to move up consistently here. Yesterday, SPUT did not raise any cash, but they did buy another 150,000 pounds. They're now sitting on 54.8 million pounds. The total NAV of SPUT is at an all-time high, 3.55 billion in net asset value for this vehicle. Huge. And that is without an NYSE listing, which they are in process. I'm going to speak a little bit more about that in the mailbag section. Year to date, they have purchased 13.5 million pounds and raised 748 million in capital. Just absolutely monstrous numbers coming from Sprott. They're sitting on 65 million in cash. The ETFs yesterday did not report any new outstanding shares, neither URA or URNM. The action in the market was very robust today in the uranium market. We had the SPUs down over 2% intraday. Now, we did see some dip buying in that last hour on the S&P, but relatively speaking, the uranium equities held up well. So why don't we look at the charts? As I mentioned, the uranium equities did outperform the broad markets today. And the S&P, like I said, was down over 2%. It did end up down, I think, about 0.3%. And we saw URA end up 0.3% on the day. Not huge volumes, but reasonable volumes. This continues to just kind of take soft steps, stair-stepping upwards. Still, obviously, a very bullish chart. All of the moving averages pointing sharply up. We continue this uptrend. Sprott Physical Uranium Trust holding up quite well as well, down slightly on the day. So they likely did not raise any new cash today, considering that the spot price moved up and the trust moved down, and they already were at a slight discount to NAV. Overall, just a fundamentally extremely bullish chart here. Looks like it's taking a rest on the MACD after a big move up, now just kind of moving sideways. Very interesting looking indicator there. And RSI, we're just past an overbought situation, but plenty of room to run. Cameco is clearly a leader of the pack here, up over 1% on the day. We did see some profit taking intraday as it climbed up almost to $32 a share, which is a multi-year high. I think we're close to a 10-year, if not 11-year high for Cameco. And this is a very bullish looking chart. Cameco leading the pack, as I've mentioned multiple times, that It seems that the market generally thinking that Cameco is going to get a lot more attention from Western utilities, all things considered, with the implications of Russia's invasion of Ukraine and the uranium tied to Russia. Cameco also does have a conversion facility that is unique to North America. The United States does not currently have a conversion facility. We do have an enrichment facility in New Mexico. Doesn't have a whole lot of capacity, but there is one and it is operating. Now, Converdyne's Metropolis plant in Illinois is supposed to be under a process of restarting. That is supposed to restart next year. However, my understanding is it's set to start back up at 50% of its previous capacity. It's going to take time for Western converters and Western enrichers to make up what is lacking with Russia being out of the game in terms of Western supply. So another interesting note coming from one of the nuclear consulting firms that we are customers of, that the Russian markets, so there's yet to be official sanctions, okay? And they're also noting this to their utilities customers. The sanctions are not yet official. However, they are seeing plenty of utilities, not only in the US and in the EU, but in the Western world entirely, that are looking for additional supply that is not coming from Russia, because they don't know what is going to happen in the future. They don't know if they sign a contract for delivery a few years out with the Russians that is technically still legal. Whether or not that's ESG friendly or socially acceptable is a whole nother story. But technically they can still buy uranium from Russia right now, surprisingly. But most Western utilities are electing to avoid that because they have no idea if those deliveries are going to be impacted going forward in the future. All right, so for the mailbag section, I want to talk about SPUT really quick. So yesterday, John Ciampaglia, the CEO of SPUT, appeared on CNBC's Fast Money. This is quite a popular show. It airs after the market every day. And, you know, a lot of people tend to think that a development like that, like Ciampaglia showing up on Fast Money or going on a mainstream financial news show is a marker of a top. And I couldn't think anything could be further from the truth. We are so far from the top at this point. It's not just a matter of where the uranium price needs to go, which I think is a very important fundamental place to start for this investment, where we know that price needs to go for the marginal cost of production. So we can easily say that's $85+ a pound at this point, and that's the quote unquote need. Those are the prices that the projects on the margin will need in order to get into production eventually, to fill that supply gap that we're looking at going out into the future. But we have to add the cost of goods, the cost of labor. Inflation is a huge factor here. We had the CPI numbers come out today, 8.5%. I'm telling you, it's higher than that. Everybody knows it's higher than that. Go to the grocery store, go to the gas pump, try to rent a new place in your town. It's like the inflation is much higher than what they're reporting, and that already is a very high number. And this affects everything. And if you've been in the mining sector for any reasonable amount of time, you know that projects never come online on time and on budget. It just does not happen. So if you think that, okay, we're at $64 a pound, another $20 a pound, this run is over. It's like, it's so far from the truth. Not to mention that the physical uranium market, at least for U3O8, has financial players. They are there, and they are ready in the wait as well, in terms of needing more liquidity for some larger funds. So we're very far from that. But there's an old saying, right? When we think about SPUT showing up on Fast Money with Mr. Ciampaglia, this old expression: first they ignore you, then they laugh at you, then they fight you, then you win. So I would say we're probably kind of towards the tail end of the then they fight you phase. There's still, we saw a tweet from Jared Dillian. He's a popular newsletter writer. I'm actually a customer of his, interestingly enough. I read his letters every morning. I think he's a great writer. I think he has some interesting insights, and it's a valuable letter. So I'm not plugging it necessarily, just letting you know that I do read his stuff. So there's some context. He had a tweet yesterday. He's like, uranium is working. The only problem is that the space is filled with a-holes. I'm not going to say it. I don't want to get censored on YouTube. So the space is filled with a-holes, newsletter writers, memes, uranium Twitter, uranium this, uranium that. And he thinks that it's a crowded trade. And so interestingly, this is a very small sector, right? So to say it's crowded, I guess in some ways, maybe that's true. Maybe there are a lot of investors aware of this relative to the market cap, overall market cap of the sector, which is, maybe around 45 billion at this point. But in my opinion, what's going on in terms of the sentiment and the enthusiasm that we see on Twitter, especially around people who are invested in uranium, has to do with two things. One has to do with the volatility. Okay. You tend to have this type of excited action and excited emotions around an investment when it's very volatile. You see that around crypto. You see that to some extent around gold and silver, although gold and silver seems to be less volatile than uranium. So it has to do with volatility. It has to do with the price movement. It has to do with the potential for this investment that is dictated, at least in some sense, by the previous bull market in uranium. So when you look back at that run that we had in 04 to 07, and you think that we could be, in the early stages of a similar run, that gets a certain amount of euphoria into the space, a certain amount of expectation by investors. Okay, so that's one. Two is that this is a difficult to understand sector. And I'm telling you now, I'm not going to share that information, but I did read his newsletter, and he did write about uranium 2 days over the past week. He doesn't understand it. He doesn't get it at all. It takes a lot of work, a lot of research to understand the depths of this market, the depth of the fuel cycle, how the fuel cycle works. It takes a long time, thousands of hours to truly understand it. That is something we have dedicated ourselves to. And that's something that a lot of people are willing to do because of the expectations of the outcome, okay? You're not going to get that type of euphoria, that number of people doing that much research in a sector that might give you a 5% return over the next year or two. That's not how it works. So you have a sector with historical incredible gains potential, okay, A. You have a sector that's small, 70 companies, $45 billion, B. You have a sector that's difficult to understand. And when you have investors willing to be contrarian and or willing to research and find out about what the heck is going on behind the curtain here, they are willing to do so because of those gains potentials. So you have people come into the space, do the work, at least do some work on it, gain a basic understanding of it, understand the risks, understand the potential over the next 1, 2, 3+ years, and then position, and then kind of cheerlead it on. That's what's going on to a lot of extent on Twitter. So I am in no way bashing uranium Twitter. I love uranium Twitter. I think it's an incredible community. What I'm saying is a lot of these people have done enough work to understand it, to feel justified in their celebration. And more power to them. So I can say that I've read Dillian's material and I'm a fan of his. I will probably continue to buy his newsletter because he gives me good perspective on other markets and the broad markets in general, but he doesn't get it. He doesn't get the uranium potential. He doesn't understand this trade at all. He doesn't understand where this is going. Doesn't understand the amount of capital that SPUT has raised, doesn't understand how much they have, I don't want to say cornered, but how much influence they've had on the spot market, doesn't understand the level of money that is sitting on the sidelines waiting for liquidity alone. He doesn't understand the way that this market moves when money flows into it and the potential for this thing to go way higher in the next few years. I think that generally speaking, most people are underestimating the run that commodities still can and likely will do. And uranium is absolutely a part of that, if not going to be a leader in that run. All right, so I didn't mean to rant a bit about Dillian's comment, but I think it's important to put some context into the uranium community. You said that people are all in on uranium. Yes, some people are all in on uranium, but even myself, who I feel like I understand uranium, the uranium investment better than I understand most other investments, other sectors, because I put more time into it. I myself am not all in on uranium. Okay, I own a little bit of gold and silver. I own a little bit of oil. I speculate in some other trades. I own a little bit of crypto. It's not a matter of being all in, but when you understand it, then you understand the potential. And that's what brings people into this trade. And that's what we do with the newsletter as well. Is like we spend many hours every single day making sure that we are on top of all of the fundamental developments for the sector so that our understanding remains pristine and remains up to date, and allows us to distill that down for our members to what it means to you as an investor. How do you interpret this information going forward? So that's what we do. That's what we will continue to do. And that I just wanted to respond on this channel to Dillian's tweets. Like, it doesn't bother me. I mean, it makes a market, really. It's I don't take personal offense to it. And you know, and he mentioned uranium newsletters after saying it's filled with a-holes. So you know, our newsletter, what do we do? And I'm going to defend myself a little bit here, and I tweeted about it. We have a fully accountable model portfolio. We only spend the cash that we have in this model portfolio. We don't just throw out like he does and like most newsletters do. I'm looking at this and I kind of like it. I think that this could go on a decent run. I might sell a little bit of this. I might buy a little bit of that. He's never accountable. He's never accountable. Doesn't have a model portfolio. And most newsletters writers do the same thing. They just throw out an idea, then they throw out another idea, and then another idea. And that's perfectly well and good. But you can never come back and say, we entered this position on this date at this price. These are our returns. These are when we sold out of it. These are when we trimmed it. This is what you expect from us because this is what we've done in the past. We're up about 535% since August of 2019. We are going to continue to run this newsletter with a highly 100% accountable model portfolio. And that's something that most newsletters, including Jared Dillian's, do not do. So talk all the crap you want, Jared, but you've been in this game a very, very long time. I respect you. I am your customer, but you don't run it in a professional manner, period. So going back to SPUT, in my opinion, like I said, I think we're leaving that then they fight you stage, and we're getting into that then you win stage. And I think that then you win stage could last a very long time. Now, to update you on SPUT's NYSE listing. So the application to the SEC has officially been filed by the New York Stock Exchange, the NYSE. Now, the way that this works is that SPUT works with NYSE to put this application forward. Now, it's in the NYSE's best interest to have SPUT as a listing on their brokerage, on their exchange, excuse me. And so the NYSE had to amend one of their rules, which was that closed-end funds had to have a redemption mechanism, so that holders of that, closed-end trusts, so that holders of that trust would be able to redeem shares in that trust, or in this case, units of that trust, for the physical commodity that that trust represents and that trust owns. And they had to obviously make an exception for this rule for SPUT, because they're not going to redeem and send yellow cake to your door if you choose to do so, to exchange your trust units for actual physical uranium. Obviously, that's not going to happen. So the NYSE has filed this application with the SEC with the statement that they are willing to amend this ruling in order to allow SPUT to trade on the NYSE without a redemptive policy. And now we have entered the 21-day comment period for SPUT to be listed on the NYSE. And they're going to take comments. They're going to get pushback from the utilities. That is going to happen. The utilities have a very powerful lobby in the United States. It's a very large fleet. That's the largest fleet in the world. And they have a powerful political lobby, as we saw during the Section 232 petition that happened a few years ago. Utilities lobbied hard against that. They did not want to have to buy 20% of the uranium from domestic producers. They didn't want to pay up for it. In hindsight, that probably would have been a good deal for them. But that didn't pan out, as we saw. And so now there's likely going to be pushback. However, they're also likely to get support from the miners. So that I expect that the miners in the United States are going to rally to support this during the comment period. So it's going to be interesting over the next few weeks. The SEC has to make a ruling of some kind in the next 45 days, actually 44 days. That started yesterday. The next 45 days, we will see some sort of ruling. Now, they can extend that ruling period for another 45 days. So what that means is we should hear something within the next month and a half, but by mid-July, we will definitely know whether or not SPUT is going to get that NYSE listing. So if you've been watching this channel, you know how I feel about this. It's not necessary. The big funds are having no problem finding this vehicle on the TSX. Okay, but the NYSE listing is what, 13 to 15x the size of TSX in terms of money flow. Liquidity will be vastly, vastly improved, especially if they get an options market. Oh my God, if they do, watch out. That's going to be an exciting vehicle to trade options on. And so that's what we're hoping for. Obviously, it'll be gasoline on the fire. At this point, though, it's absolutely unnecessary. This market's going to continue to move in the way that it is with the TSX listing. And I think that once that NYSE listing, once we know whether or not it's happening, that'll at least put a cap on that question, and the market can move forward. So very likely there might be some funds that are right on the edge of SPUT meeting their liquidity requirements for positioning. And those funds might just position once they know that the NYSE isn't happening. We believe it will. We believe that SPUT believes it will. I don't think that they would have necessarily gone for this, even though they're doing very well already, if they didn't believe that that was a likelihood to get on the NYSE. They've clearly done that with their other physical trusts. So looking forward to that development. That is in process. NYSE has filed that application with the SEC. They have made an exception for that redemption clause. And now it's in the hands of the SEC. And now we have a 3-week comment period. Very exciting times. All right. Sorry to rant a little bit. Like I said, I don't hold any ill will towards Mr. Dillian. I am a customer of his. I think he's a good guy. I share his love of cats. I have 3 of my own. I'm just at the level, one more and we go into the crazy cat lady territory, but I think we're at a decent level with 3 cats. He's a good dude. I like his writing, and so no bad blood, Jared. Keep up with good work. I appreciate your writing, but don't call us all a-holes, all right? There's a lot of very, very smart people in this space, and they have done thousands and thousands of work. There's hundreds of millions being managed between Segra and Sachem Cove alone. They're managing almost $500 million between those 2 funds. So, and they're as sharp as you can come by. All right, everybody, take care. Cheers. I will see you again tomorrow.